I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the Vinny G Markets channel, brought to you by Vinny G Money. And we haven't put a video out in a while now. Reason being is if you're just following the indicators, you should see what's going on. We don't want to keep talking about the same stuff over and over, but we'll do a quick recap, drop some knowledge real quick. If we look at our first indicator, the US 10-year Treasury, we're currently at 4.8%, which is extremely high, which is why the market's been taking a hit as of late. And on this 10-year Treasury, we've been doing nothing but going higher up until March. That's when the Silicon Bank Valley stuff happened. The bank failed. You can check out last video. We're not going to talk about the same stuff over and over, but since March the rates have been going down because that whole crisis, that bank crisis, allowed the Federal Reserve to print money for a little bit, which was bringing those rates down. Well, it looked like that stopped. And it's almost the same thing with the US dollar index, which is our second indicator. From February to March, we were going up, which we know puts pressure on the stock market. But again, in March, with the whole Silicon Bank Valley stuff, gave the Federal Reserve the excuse to print money. We're not going to talk about the same things, I promise. But that's what actually started dropping the US dollar index as well, because it gave the excuse for the Federal Reserve to print more money. Things like the US Treasury rate and the US dollar index that will go down from these actions, creating this relief we've seen for the stock market, which we'll take a look now. So we got the S&P 500 year to date. It's up a little over 12% for the year. Dow Jones year to date, it's up almost 1%. Not too much goes into the Dow Jones, but NASDAQ year to date, it's up almost a whopping 30%. These year to date gains, at least in my opinion, are very impressive considering the Federal Reserve, they've been increasing their rates. There have been pauses here and there, but even their last meeting, they increased their rates by 0.25 basis points. So I guess you got some people out here that think the Federal Reserve is going to pivot their stance on interest rates and start reversing course. Or you have people out here that think the Federal Reserve is going to keep their word about some type of soft landing. I'm here to tell you that neither of those things are going to happen. And without the Silicon Bank Valley crisis, there would have been no excuse for the Federal Reserve to increase their balance sheet. The increasing of their balance sheet is what put those interest rates at a pause, which created the boost for the stock market. Because again, we're not going to be talking about the same stuff over and over. You got to go to the prior videos. One of the main things we were going to monitor is the Federal Reserve balance sheet. And we've been stating in all our prior videos that we're more concerned about the Federal Reserve balance sheet than the actual raising of interest rates. Because the Fed could raise rates all they want, but if they keep increasing their balance sheet, the stock market, the economy, they'll love that. Assets will still stay inflated. So if we pick up where we left off on our last video, since July 2022, the Federal Reserve balance sheet has been doing nothing but going down. Uncle Jerome, he's been keeping his word about running that balance sheet off up until March. And March was the Silicon Bank Valley stuff that was going on. We didn't cover this in our last video because it didn't happen yet. But mid-March, the Federal Reserve, they started increasing their balance sheet again. You could see right on this chart, in that month of March, there was a jolt up, and this is what created the relief for the stock market and the economy to stay inflated. But looking at the Federal Reserve balance sheet since the end of March, there hasn't been any other crisis which gave the excuse for the Federal Reserve to boost the balance sheet. So since the end of March, the balance sheet has been going down and the stock market is finally catching up with it. The S&P 500 and NASDAQ, they're both down 6% across the board over the past 3 months. And we don't have to look any further other than that Federal Reserve balance sheet to find out why this is going on. Forget these economic reports, production reports, consumer reports. Company earnings don't matter. Forward earnings don't matter. The only thing that matters is the Federal Reserve tapering off that balance sheet? And if so, how is it affecting the interest rates? And this whole scenario, it's been going on since 2008 from the financial banking crisis where we entered this quantitative easing program. So from 2008 to 2018, again, you could look this up yourself. You could Google Federal Reserve balance sheet. It'll bring you to their actual website where you'll see from 08 to 018, the balance sheet was doing nothing but going up or paused. But from 2018 to 2019, you'll see the balance sheet, it actually started to decrease. The Federal Reserve, they went into autopilot. We go over this all in our last videos, so you got to go back to catch up. But you should see the trend that's going on. It takes a crisis for the Federal Reserve to print more money, which keeps the economy and stock market boosted. 2008 was the financial banking crisis, and we started going down in 2019. The whole thing happened in 2020. We increased our money supply by 20%. And now, since we started going down in the balance sheet, you had the Silicon Valley crisis, which you should see we're in a crisis to crisis basis to basically keep the economy inflated. But anybody that's out here speaking that the Federal Reserve, they need to stop printing money, they need to taper off this balance sheet, even though that might be true, if that happens, things are going to get real for a lot of people. Credit's not going to be as easily accessible. We go over all this in our last video. We're not going to repeat the same stuff. The pension systems, Social Security, they're all basically going to die if the Federal Reserve doesn't continue printing money. So if you can ask for my analysis on where we think we go from here, we're definitely stuck in between a rock and a hard place. But if you're looking for my analysis, which is definitely going to be wrong, I think the Federal Reserve, they're going to continue to find ways, just like with the Silicon Valley crisis, create these crises that give the excuse to boost the balance sheet just by little bits here and there. But just like the Silicon Valley crisis, that balance sheet, it didn't come anywhere near its higher highs. You'll get these jolts, but then it'll come back down. You get a little jolt up on some other crisis, then we move back down. So that's going to make the stock market and the economy kind of just go down in a slow, controlled fashion. I don't see any type of flash crash happening, but I don't see a pivot by the Federal Reserve to the point where they're lowering interest rates. They clearly state we're going to stay higher for longer. So even if we stop raising interest rates, they're not going to decrease them. Personally, they might continue raising them. Reason being, what have they been saying this entire time? They want people unemployed. The Federal Reserve is looking to fight inflation by having people make less money, take more jobs away. This is how they're fighting inflation. And all we could do on the Vinny G Markets channel is make our best guess as to what's going to go on with all this. So when it comes to the Federal Reserve and what they're going to do with these rates, we have to look at human behavior, because at the end of the day, humans are the most valuable commodity. We're the same thing like stocks and securities. That's why we have all these similarities. Our birth certificate has a certificate number, so does a stock certificate. Stock certificates also have certificate numbers. That's why we have social security numbers. And because our social security number is on a legal document, we could go to the Webster's Dictionary, look at definition number 3, an instrument of investment in the form of documents such as stock certificate or bond providing evidence of its ownership. So once we have a social security number on an official document, we're treated like these financial instruments. We're the same thing. Again, with the social security number, humans are a security, and so is a stock. And you can look up the definition of security when it comes to the financial aspect. Securities are fungible and tradable financial instruments used to raise capital in public and private markets. There are primarily 3 types of securities: equity, which provides ownership rights to holders; debt, essentially loans repaid with a periodic payments; and hybrids, which combine aspects of debt and equity. People, that's all we are. We're securities. That's why you have a credit score. Your credit score is just the value of your security, how good you are within the system on repaying debt at higher interest rates. Because even with a good credit score, especially with this higher interest rate environment, no one's going to give you any major money unless you really have some type of collateral to back you. Your credit score don't really mean nothing. Again, it's just the value that's on your certificate. Because we're a traded human commodity. Y'all don't hear me though. But let's get back to the point. Human behavior right now, human nature, people need to make more money than they ever had to keep up with this inflation. And I ain't mad at anybody making more money for themselves. That's what we need to be on. Plus these amounts, they're dropping the buckets for corporations, but we're going to get into the corporations a little later. But human nature, we have these, UPS drivers earning now $172,000 per year. This is just the major headline. Now we have salary expectations for new workers are at a record high, $78,000. Again, we're not debating whether it's right or wrong, whether people should be getting paid this money or not. Trust me, I'm the last one. I want to see everybody make money out here. But this is the human behavior, human nature right now. What is the Federal Reserve telling us? This is exactly what they don't want to see. So when they're seeing these are the major headlines, how are they going to pivot off a higher interest rate environment? And more importantly, if this is combined with the Federal Reserve tapering off that balance sheet, that's what's going to cause major issues when it comes to the economy, comes to the stock market, comes to just people in general. But we continuously see the scenario of world war breakout, and it costs these countries a lot of money to go to war, and this money doesn't come from thin air. It's printed from the central banks across the globe, and it's the central banks that have been the cause and reason for every war since they've been around. The more money they print for these countries, the more power the central banks have, because that's more debt owed from these countries to the central bank. banks. And you got to go back to our past videos. We're not going to keep talking about the same things over and over again, but we go over how all these countries have been making alliances, positioning themselves for the eventual all-out break of World War III. And as of late, we have Israel declaring war with Hamas. Around the same time, the United States just sent $6 billion to Iran. And you got to go back to the prior videos, but we all know Iran and Saudi Arabia have been getting closer, with Saudi Arabia loosening their ties with Israel. But at the same time, Israel been increasing their exposure to the Chinese yuan because they know that's going to be the new world reserve currency. And China been making deals with Russia and been making deals with Africa. But there's only two reasons why we're even going over this. One, it could be the next crisis that's used to increase the Federal Reserve balance sheet, and that could keep interest rates at bay, helping out the stock market. And also when it comes to our third indicator, crude oil, which has been going up over the past 3 to 4 months. We're currently, I believe, at $86 a barrel WTI. And we're not going to keep talking about the same things over and over again. You could go to our past videos. We already know OPEC, they've been decreasing their production for quite a while now. And the United States, they just keep coming out with these nonsense reports that crude oil has hit its peak demand. And we know this is nonsense because, again, we're going to look at human behavior. Humans are nothing but securities. So when you understand human behavior, you could understand these markets better because we're all just different securities in this giant system. And humans right now are traveling like it's going out of style. Everybody's going on vacation. Everybody's traveling. You could just look at people you know, go on social media. People are posting pictures and sending videos of them going on vacations, which is nothing wrong with that. That's all great. But how has crude oil hit its peak demand when you have this travel surge going on? And people are still out here driving cars. People like to drive to go out and do things, and nobody's out here trying to take public transportation. And car sales have been doing nothing but going up, all while Jerome Powell just looks at this and nods his head because, again, this is the exact thing he doesn't want. And don't forget, the United States been draining the strategic oil reserves. At the same time, global conflict is only increasing, which is the reason why we're still very bullish on crude oil. We've been bullish on crude oil since we started this channel. Nothing's changed. Like we've said before, we'll go down with the sinking ship, but crude oil and energy are spots I still want to be in. So this will lead us into our overall thesis of what do we want to do from here. We're not doing all this research not to act accordingly, and we're going to first start off by looking at human nature because humans are securities. So if you could figure out human nature, you could figure out these markets. It's all one and the same. So we're taking a look at human behavior, and we're basically going to do the opposite of all that because most humans got parasites in them, so they're moving in a parasitic fashion. Y'all don't hear me though, but one of the highest forms of debt is student loan debt. And you can just take a look at social media. Anytime something's posted about student loans, you get people going on there thinking they're slick, saying they're never going to pay these loans back. And even canceling student loan debt, they put that out there to make people not pay, think it's going to be canceled, but it's never going to be canceled in a significant fashion. The world leaders, they want you in debt. You got to go to the Bible. The Bible tells you everything. Proverbs 22:7, the rich rules over the poor and the borrower is the slave to the lender. Once you understand this, you understand the bank doesn't even want your money. They control the money supply. The central banks, they already print and control the money. They don't need this whole elaborate system with student loan debt to take your money. They just want a system when you're in debt because now you're their slave. Also, once you borrow money, it's in your vibrational plane that you need to pay this money back. You need to go on some type of journey where you're going to find something where you're going to get this money to pay that person back, and you're going to learn some type of life lesson, learn a skill. There's something you need to figure out, that journey you need to go on when you get money to pay that loan back. It also tells you this in the Bible too. Psalm 37:21, the wicked borrow money and do not repay, but the righteous give generously. When you borrow money, you have to go out there because you're going to learn something that you'll be able to use on your life journey going forward. By not doing this, you're just falling into the bank's plans because you're always going to be in debt, and eventually you're going to be dependent on their UBI system. And that's also the real reason why you want to be debt free. We're heading into a whole new financial system with the fourth industrial revolution, and you want to head into this with the least baggage as possible because you don't want to be subject to whatever the world leaders are trying to push on you at that point. And if you really want to get ahead going forward, at the same time you're going to be debt free, you're going to have to find ways to start stacking cash. Everybody, you could just go on social media. This is human behavior. Everybody's talking about taking their money, making their money work for them, putting your money in all these investments. I don't know investments people are talking about. There's really nothing safe that you could put your money in where you're going to earn anything significant back. So I'm going to be one of the few people out here talking about the United States dollar. It's going to have one last run. When things start really getting bad And again, it goes to the Federal Reserve balance sheet. Believe it or not, the safest thing people are going to go into is that US dollar. It's not going to be the world reserve currency going down the line, but I don't think we're anywhere close to that. That's just the overall goal. Before that happens, cash will have one last run, and it's just basic supply and demand. We have the chart. Most people don't look at this, but the Federal Reserve, they are tapering off their balance sheet, so that's making cash a more rarer item. And most people, credit card, just whatever debt right now is at its highest levels, so people are gonna need cash to pay off this debt. So cash is gonna be a very popular commodity going forward, believe it or not. And when it comes to stacking cash, the Vinny G markets, we might not have the best way possible, but what we try doing is flipping these stock options. And on top of it, you know, we a little crazy out here because we flip these 0 DTE SPX contracts, and a lot of that is posted on the IG, and that's one of the reasons why we really haven't put in too many videos out, because again, it's all the same stuff. We don't need daily updates on what to look for. There's plenty of other channels out there. I also want to make another video on the channels that I watch, where I get my information from, on basically maybe not a daily basis, but they put out work on a daily basis, so there's no need for me to compete with that. A lot of the energy, it's going into figuring this trade and stuff out, and I eventually want to start putting out videos about the progress and the journey, because if you get into trading, you'll realize that no one pretty much around you is able to help you with anything. It's all self-learning. So if I could put something out there, even if somebody's learning one thing from that, you know, it would make it all worth it. And just for a preview, trading in a nutshell, it's like taking all your human tendencies and doing the opposite of that. That's why trading psychology is so difficult to master, and you still got to put in a ton of work on that screen time, looking on charts, messing around with different indicators, along with money management. Money management goes into the human tendencies of doing opposite of what you're normally thinking. So definitely expect these trading log videos to come out in the future. And if trading's not for you, you basically just have to find out what talent God has given you. God gave us all talents. The way you find that out is the first thing you need to do is clean up your diet, look up what minerals your body needs, flood your body with these minerals, start exercising. You're gonna get better blood flow with these minerals going through all your organs, so you're gonna clear a lot of stuff out, so you'll have a more direct path to God, and He's gonna guide you on what your talents are. Now once you find that, you have to exercise these talents, harness these talents, and use it for the greater good of the people, and God will look out for you from there. But y'all don't hear me though. And as you start generating cash, you do want to allocate a set amount of that money that you don't care about, because you can't invest with scared money. You're gonna make bad decisions, into building a portfolio that consists of shorter term, longer term investments, and we'll put out another video on that. I don't want to spend too much time on this video, so that's more material y'all could look out for in the future. So that's the financial and economic storyline broken down the best way possible on the Vinny G Markets channel. But expect new videos going forward. One, we want to put out those trading journey videos. Two, we want to put out those videos on how to build a portfolio, or at least how we're doing it on the Vinny G Markets channel. Three, I want to put out a selling out of United States video, so people could see how the United States been getting sold out, and people will be able to more clearly see why United States, it's not going to be the global power anymore. That's going to be China. So they get a more clearer visualization of that onto why we're building a portfolio a certain way. It's been a while since we put a crypto video out, so I do want to put a video going over the infrastructure of the crypto market, so people have a clearer visualization on how all this stuff works. Not so much on what we should be investing wise, but just how that digital space works, and that'll give you a clearer visualization on what you should be invested in once you have the knowledge. And five, just knowledge drop videos on this matrix system, how we can navigate out here to succeed and to get closer to God, because at the end of the day, that's the only thing that matters, getting closer to God and living through His laws that are stated in the Bible. So that's 4 fresh new joints you could look out for. So we're stretching the game out, Xing your name out, put Vinny G on top, dropping videos non-stop. So if you like what you hear, come mess with your boy. Hulk smash that like button. And as always, I'll leave you off with this. The God of the Bible, the God of Abraham, the Father of our Lord and Savior Jesus Christ is real, and may He bless you.